3, 2, 1.
That's right.
Give me fuel, give me fire, give me that which I desire.
Hooah.
Oh, yeah. And here we are. Welcome, my friend, Mr. Scott Heinila, my long-term 30-plus year friend.
Very happy to be here. I'll go out on a limb and say that I'm probably going to be the longest standing relationship that you would have in your podcast. But we'll see how that plays out.
We'll see how that plays out.
We'll
see how that plays out in the future. But that is correct, sir. You are correct. I mean, we've known each other for 30 years. It's been crazy. Look where we've come. I mean, I am so proud of you. Look at where we come from, where we came from, and where we're. Look at us. Look at us.
The streets of Fountain Valley.
The streets of Fountain Valley, and we're here, and and that's one thing I want to bring you in and really talk about, our relationship with the enlightenment and things that have that we've gone through, and things of the successions and the families and family man, wife, and all the things you've done. And I say I'm very proud of you.
Thank you.
Yeah, I'm very proud of you, where you've come and what you've done, and the adversities and things that we've all gone through, and the successes now, and now reaping some of the benefits of the fruits that we laid, and the trend. Which is,
I would be remiss if I did not acknowledge your success as well. And
well, I'm still working every day. I'm still trying to plant those seeds every single day, keep growing.
One brick at a time.
One brick at a time. But really, what I wanted to start with is, of course, our history, where we come from. We grew up in the streets. We did all the sports together. Went to school together, and then we had a very great. We are hardcore fans of Mr. Metallica.
That's right.
The Metallica, as everybody got our first, that first thing, Give Me Fuel, Give Me Fire. That is a great song, and it is something that we also use and always talk about when we start out something. But moving on forward, I wanted to give me a little history about you, Scott. I know you're Scott, but how, as we're talking about coming here representing a producer, coming with Producer's Choice, talking about insurances, annuities, and long-term care insurance, LTC.
Yep.
Really, I want to, before we get into that, I wanted to understand really what's your perception? How did you get into this field? And I know you've gone through a lot from the bottom. You worked all the way up, and now you own your own company, and you're as a rep company for Producer's Choice, and moving forward from there. And you've done, the success you've had is great. So where did it all start, and how did you get to where you are today?
Well, that can be a very long story. Yeah. I'll give you the Cliff Notes version of that, which I fell into what it is that I do today. I mean, you and I both went to the same college, university, and graduated with a degree in finance, and just fell into what I now know today, which is really annuities and insurance solutions to financial planners. In going to Long Beach State, at the time we graduated, right, it was 2000, 2001, which we all know now as the tech bust, right, the tech bubble. All the dot-coms and the stock market was roaring through the 90s, and that all came to a screeching halt in the early 2000s. And my first introduction into the professional world was actually as kind of a mentor, not a mentor, but just a junior advisor and an intern at Morgan Stanley right there in Long Beach by our college. And so, that was a very, very interesting experience and time in my life. I always thought that I'd want to be a stockbroker, a financial advisor, and not really understanding what that really meant at the time. And I can remember clearly phone calls, because the advisors would, on the floor, basically just push any negative calls of people they didn't want to talk to the intern. And I can remember in particular certain phone calls that would come in from people who were crying because they'd lost so much wealth, and thinking to myself, God, there's got to be something else. And in finance at that time, there was never any conversation around this topic or this word annuities. I'd never heard of it. I never even knew how they worked. And then even indexed annuities to go a little bit further in that. And my buddy, who we know, our buddy, close friend of ours, which he was in construction, his brother was in the insurance business, and said, my brother does something along the lines of finance. You should talk to him. He didn't do any financial planning or anything. He just sold annuities. But it was so enlightening to understand how those products worked at that point in time, where so many people would be, so happy and blessed to have a product in the way annuities work, where a client isn't exposed to any losses, but they share in the upside of, let's say, the S&P 500. So it's like just this very refreshing place to be. And so I was born into the insurance business at that time and really never looked back. And that was in 2001. Had my stint with that company, cutting my teeth. In our word, or in our business, we call that, smiling and dialing.
And the grunt work, as you are of the intern and coming in. And it's a tough, but you have to start somewhere and you have to work your way up. And when you get 100%. Your hands dirty, and that dirtiness of getting your hands dirty and doing that grunt work builds the character and builds the direction. And it really gives, am I going to make it through? Yeah. And I think that's what built your character.
And I mean, I'm sure there are people that really love the challenge and just have that personality, the water off the duck's back kind of mentality of, cold calling and being hung up on, and they're not perturbed by that. That's not me. I certainly was, and it was a big challenge for me, but it's how in a sales organization you have to cut your teeth, You could be the brightest person from a financial perspective, but if you don't have people to talk to, i.e. prospects, what opportunity do you ever really have to bear that fruit of knowledge, right? Yeah. So you have to learn to be able to be effective from a prospecting, sales, and marketing standpoint. And that's what our business is today. That's what we do. We assist our advisors, financial planners, in the areas of expertise that we have true knowledge and professional wherewithal to help them be effective with their clients. And it's a wonderful space. It's afforded us, it's a good life, and I love doing it, So we're first and foremost sales and marketing individuals or professionals with a knowledge and expertise in annuities, life, and long-term care. Okay. And I tell people this all the time, since I've found this, it's like I've never felt like, God dang, I got to get up and have a job to do. It's something I've really benefited and just enjoy the challenges and the struggles. And this between you and I, it's not meant to be easy, But why would we want something to be easy?
There's no challenge. Right. And that's what you say, the challenge of the rewarding side of accomplishing or helping somebody out or supporting with, on yourself financial planning and things like this for you. It gives you affirmation and fulfillment that I can change someone's life and their their direction in their life with different planning financial during the next 20, 30 years of their life and certain programs. But moving to that is you explain a little bit about Producer's Choice and how you created an entity under that of your own entity. So as of now, that really, as your mission is, you get fulfilled by helping people making financial decisions as you are helping agents, correct? You sell your product is to agents, so you actually aren't B2C, you are B2B.
We are our predominant business, our core business is business to business.
Okay.
So we represent 20, 30 different insurance companies' products with then may amount to 300 different individual products. Well, how effective can any one person be in knowledge of every area of financial planning, right? So typical financial planner's expertise lies in accumulation of wealth, what we would define as equities and fixed income instruments, traditional investments, stocks, bonds, mutual funds, ETFs, all that kind of stuff. But when it comes to insurance planning or risk management solutions, many advisors don't have extensive expertise. It's not their core business. It's not their bread and butter. So they partner with companies like us and lean on us to be an extension of their practice, right? In the areas of expertise that we represent, So it's a wonderful partnership. It's a wonderful marriage. And it's just about cultivating the right relationships with the right people. I mean, at the end of the day, if you were to wave a wand and only work with people that you enjoy and share like mind, what a concept, It's like professional utopia.
I mean, that's one thing as you've been such a adverse speaker and you are now, as you position yourself as a leader in this industry, you are, as I've personally seen, you speak at a lot of events, you put on events, and really as I said, as a leader, as a person, that gives you the affirmation of educating and showing people products. And that's one thing as people, even people listening today, is myself included, is really what are these products? People have retirement plans, right? You got 401ks. People go start from, as a kid, 20s, you get a 401k plan. Usually, what is that? I just get your company is giving you to 401k. Right. When we get to that, what can you invest it in? What type of products? And I think that at the advisor side, there are advisors that come in even to our business and to many other businesses that give, okay, you can put in this vehicle, and they advise the employees, correct? Right. So they advise employees where they can invest their money with the products. You can put it in S&P, you can put it in high risk, low risk, or see where are you going to put Tesla, Apple stocks right now. But one thing is I want to take a step back and to educate people of the different products as well as what is out there. As I say, can you explain to me, let's take it back to a 401k. With a typical 401k in someone's business, what can you do with a 401k? How can you invest it?
Well, that is pretty highly regulated, right? Yeah. So, but it would be based on the underlying company. It's a deferred contribution plan for employees, and sometimes the employer is obviously making contributions in that as well. But it's typically mutual funds. To answer your question, it's going to be a set list of mutual funds that the contributor, i.e. the employee, have the ability to invest in through payroll contributions, right? And it's meant to be, the future of their retirement income. And in my earlier years, or in a person's early years of working, it really isn't necessarily as important in terms of true or comprehensive financial planning as it is just getting things started.
Correct.
Start contributing.
Correct.
And start contributing to the extent of the benefit that the company matches those contributions. At least get to that point, right? But then I start to work through myself in my professional career, and I get to my 40s or 50s or what have you. The paradigm and the focus and the concern start to shift. They should more to, okay, we've amassed a nice pool of assets here. I'm getting within earshot. I can see the light at the end of the tunnel of when I want to stop working and retire, and switch from accumulation as a focus to maybe decumulation, right? So how do I start to distribute assets from my retirement funds? Hopefully it's more than just a 401k. And how do the rules of the game change, And they should, because now it's more about safety, de-risking, as opposed to, we joked about a little bit, but, financial planning doesn't begin and end with buying Tesla and Apple stock. You know what I mean?
No, I want to take a step back, put a little more perspective, because the 401k, of course, is the traditional thing that we get, a traditional product as an employee to most corporations that contribute to it.
Yep.
But then we move forward as we age and other products that we can invest in. So we got the 401k, and as we spoke about earlier, annuities. What in that aspect, can you define what an annuity is and how do annuities work?
Yes, I can. And without getting super granular in that, they understand, in any asset class, there's a number of subsets. So you have many different types of annuities that exist in the marketplace. You have variable annuities, which are registered securities and have some level of risk. Then you have a whole world of fixed annuities that may be tied to a specific interest rate, a declared interest rate, like a CD. If I bought a bank CD for 3 years or 5 years, I know exactly what interest rate I'm going to get for that period of time. And once that matures, what do? I find the next best CD, that kind of a thing. So there are annuities that assimilate to that or have comparable in terms of how they earn interest. Then you have other products that are tied to an index like the S&P 500, which is simply a measuring stick on how you determine how much interest you earn. So the difference there would be, instead of me knowing exactly what interest rate I'm going to get, I'm going to get a rate of return based on what the S&P 500 does up to a limitation. The trade-off is I don't get any risk. So, like in 2008 when the markets are down 38% by and large, my worst case scenario is going to be 0% return.
Okay.
Well, that's a really, really good place to be if I'm 62 years old and very, very close to retirement, and I can't afford to lose 38%, And then you have other types of annuities that generate income and guaranteed income for life. Even if the account value depletes to $0, the insurance company is going to continue to pay a check to a person. So in today's world, there's really two segments that we see annuities being utilized. One is in the area of just safe accumulation, an alternative to risk in a portfolio, or an alternative to fixed income instruments in a portfolio because of all the issues surrounding interest rates and bond yields and all of that today. I mean, interest rates are historically so low today, right? The other side that we see annuities being used is just in guaranteed income planning. So it's all working in context of a whole comprehensive financial plan, and depending on that financial advisor's approach, am I using annuities for safe accumulation? Am I using annuities for income? Or am I using annuities for a combination of both, right? And so there's where the role that we help advisors play in making sure that we're aligning those goals, those objectives with the optimal product solution. Because not every product, not every shoe fits.
Correct. Every shoe fits. So thank you for explaining the annuities. That's why I wanted to understand the basic products, the 101, because that term annuity is used a lot, and a lot of people don't have the basic concept or the understanding of how it works or what type of indexes or funds is it related to? How do they make money?
Absolutely.
What do they do? And also, it's funny. People say 401k. Can a 401k, can they cash it when they get older? They cash it out, put it into annuity. These are types of things that I think it's just not having a perspective and the education. Some people just like, I'll figure it out as I go. And they don't have those type of advisors or professionals around them that give them the insight of how to make a calculated investment decisions for their life, as middle of life, or as they get to this as the retirement age, for that. So then we get into the aspect of annuity, and now we get into life insurance. As life insurance, people all know about life insurance. The generic form of life insurance, you pay and you get, if you die, you get some type of payout, for your as you would say, your family or whoever is your trustee, as your trustee, correct? Who would be your beneficiary,
right?
And would get your payout. So, but there's a lot of different products in life insurance, correct?
There are a lot, and there's a whole world of life insurance planning, or I should say, using life insurance products as part of business or financial planning or estate planning, not to get into the weeds with all of that, but life insurance is a tool that can be used across many, many different platforms and needs. You mentioned the most rudimentary need for life insurance is perfect example, you or I, right? We're in our working years, yes. Working towards our peak earning years. We own a home, maybe two. We have cars. We've got assets. We've got debt. We've got kids. We've got obligations. Well, what happens if I was to prematurely pass away for whatever reason? Well, I don't want my kids or my wife to be left in a position where they have to fill this huge financial gap, right? So the easiest place to solve that problem with a very, very small amount relative to the amount of benefit that I would get is through some form of term insurance, right? Pay off the mortgage, pay off the debt, maybe some funds for college for the kids. Wife doesn't have to really pick up all the slack in terms of loss of income. Maybe take time off, right, to figure out what the heck do I do next, and vice versa. A lot of people don't think just because if I have a spouse at home, my wife, and in my particular scenario, she's a stay-at-home mom. That's our choice. If she were to pass away for whatever reason, I'm going to be impacted in a massive way in terms of, well, now what happens to my children, right? So, planning in both ways. Just because one of the spouses doesn't earn an income doesn't mean I shouldn't plan for that what-if scenario, But the other part would be from a business standpoint, too. So there's life insurance plays a wonderful role in succession planning for a business or for specific businesses as it relates to partnerships or to businesses that have huge intellectual capital tied to an individual within a practice. IT, let's just say, which you're very familiar with. In many cases, there's a person who's predominantly responsible for the livelihood and the profitability and the success of that business.
Right.
What if that person was to disappear? How would our business be affected?
Yeah.
And in some cases, it's huge, right? So life insurance can fill that void, because what we're going to have to do if this person passes away is monetize the loss in some value, and we've got to continue on. Or let's say you and I are partners. We start a company, and I'm all marketing, but you're everything that the business has to do with operations, and that's the last thing that I'm ever going to do.
Right.
What if something were to happen to one of us? That would be a huge impact to our business.
It's like losing an arm.
Correct.
How do you function? That's
exactly. So that's what we call key man insurance. You are a key person within an organization, and if you were to pass away, we would be in a bad place. So how can I most effectively fill that void without having a massive financial impact on the business? There's no easier way than through life insurance. The other one is through buy-sell agreements. So if we have a business and it's valued at $20 million and one of us were to pass away, well, who's going to be knocking on the door for their
share?
Their share.
Their share, the family or
Your
whoever
family.
is the family. Yeah.
Of course.
Yep.
Right? So, or they're going to step in and say, well, we're 50% owner of the company, so we're going to start meddling. And do they really know that much about the business?
I mean, that brings up a good topic. Take a step back there is the life insurance. Something that really brought up to mind is the planning, as a buy and sell agreements, estate planning.
Estate planning is another massive area. That's
a big area that I think we should jump into is estate planning. And what is your thoughts and your strategy just as a 10,000-foot view on estate planning?
So that's very politically charged. The future of estate taxes and estate planning is always going to be a legislative decision, right? So the question always is going to be, or the statement. So right now, the basic exemption is $11 million per person. So if we're married, we get, which we aren't, but you're looking at an estate tax kicking in at $22 million plus, right? Yeah. So that what percentage of people does that really affect? It does. Yeah. We'd love to work with those people and help them with tax planning, right? Because they have a huge, huge need for insurance, but it's not as norm as it once was when the exemptions were much lower. Now, the future, based on not just this election, but future elections, because when does the estate tax get applied? Not till the individuals of that estate pass away.
That's a good point you're bringing. So that estate, it goes by the rules, regulations of that, as we say, of that time. So if we created an estate in 2020 and something happens to one of the people in 2030, it doesn't take the rules from 2020. The estate rules come from 2030, right?
Absolutely. It's when those deaths occur.
Engage, and that's the day of the rules.
So, it could be 10, 20, 30 years away, right? You always should consult with not only your attorney, so find a good estate planning attorney, but also a CPA, right? So we don't give tax advice, we don't give legal advice, we're just speaking in generalities, right? You definitely want to consult with the right professionals on all of that. But in concept and in general concept, right? There's massive conversation that says that the estate tax exemption, as generous as it is today, is going to get massively reduced in the future.
It's going to get cut.
So 2 to 5 million per person they're talking about. I mean, if it's 2 to 5 million, or let's just say 2.5 million per, well, that's 5 million per couple. That affects a lot of people that are going to be hit with estate taxes. So does it make sense to start looking at estate planning strategies? Now you have to, consumer has to answer that based on.
I think it's with all the assets too. I think it depends upon the amount of assets of the family, the person has, or whoever they are, because there's more things that are taxable. Because if something happens, and as you say, the husband dies, they have an estate, but they're in debt, and the husband dies. Maybe there's no life insurance, but they have an estate plan. There's a trust that gets transferred, but there's a tax on everything.
Yeah.
So there's a tax. It's taxable, and that they don't have enough tax. They have to sell the assets to pay for the tax, or just to get, so they don't have to tax.
That's right. And that's what people don't really, I think, they don't take the time to process, how that all plays out from a business standpoint. I mean, how fast is a business moving? Yeah. As a business owner,
it's moving.
As a sole proprietor, how fast are we moving?
Oh, it doesn't stop. Yeah,
it doesn't stop.
It doesn't stop. It just keeps inside. Yeah.
And the same thing goes with just individuals, in general. And the point of that is time just flies. And I never take the time to work on my finances or on my business. I'm just always in my business,
You're pushing forward. You're trying to steam ahead, try to growth, expand, and then you lose the perspective of behind you of everything you built. What's going to happen to all the wealth or the money or family that you created, and then something unfortunate happens.
Correct.
Right.
And use real estate as an example. Yeah. So just how many people? What percentage of an individual's wealth is tied up in real estate?
I don't know those figures.
By and large, no. It's a predominant share. Okay. So just take average person. I own a home, I have a 401k, I have some assets, or I have a business. So the business has value.
The value, yeah.
The business owns a building, that has value.
Yeah. Okay, so that makes sense.
You know what I'm saying? Yeah. And so if I have an estate tax problem, what people don't realize is the government comes knocking on the door, and they're going to collect their bill, which is the taxes, and they don't care about the liquidity or illiquidity of those assets. So to your point previously, let's say I have a $20 million estate or $30 million estate, and it's tied up in non-liquid assets. The government doesn't care. They're going to collect their $5 million. Well, where's that going to come from? Life insurance, if properly planned, you pass away, $5 million goes into the account fully tax-free. Government takes that $5 million. There's no interruption to the other assets within the portfolio or within the estate. But you have to be willing to do that planning.
Yeah, well, it really makes sense, and I think that's somewhere a lot of new families, especially when you start having a family, get married, have kids, a lot of stuff will matter, because as a single person, as an entrepreneur, it's not because who's going to be the heir of it, but when you have families, you have kids, it's like you don't want, you discussed, you don't want to have money for enough school, debt, tax debt, anything that happened. And also doesn't matter I love how you put it, doesn't matter if you're the working parent or the non-working parent. Both of you have responsibilities and a job, and they both are at a loss if someone is gone. So there needs to be some type of responsibility and, as you call it, an insurance that can help that person get past that.
Absolutely.
That's that wall that they're facing, and that the great they have to climb to get over it, and the challenges in front of them.
Correct.
But yeah, really, that's really I want to understand, because life insurance is a big thing, but it goes into estate planning. As myself as Manna and I, we created an estate plan when we got married, because then we had actually, especially when we had kids, that was it. Right before this has to be done.
So important.
At least have the base, because in my opinion, I think as we get older, there are more assets might come involved. We can put more things into it. This is going to and as of course my father created a trust, but as well as these things evolve, and I think sometimes we set them stone, we forget about them 20 years later, like, oh, I forgot to add this, or I forgot to change this, and that's where some people never look. As you said, they don't look back. They're too busy going forward.
That's right. And the one thing I would say, and again, we are, like I say, we're product nerds, right? We help the advisor to be a product analyst. I joke around with we're the product nerd in the areas of expertise. So we're not directly financial planners, right? So that's another disclaimer. But if you take away nothing from this, from the insurance or planning part of this whole thing, take away this. Every financial plan should start with the trust planning and estate planning first. You know, your situation is very unique from the next person. And in order for anybody to be effective in doing financial planning, it absolutely starts with the proper trust, the proper planning within the estate and the trust first. Because everybody's scenario is going to be unique and different. And that's what makes this so special.
You know? I agree. I mean, you nailed it right there. I mean, it is. I think everybody has a certain scenario. Everybody has a certain.
It's not cookie cutter. You
know? There's nothing in life that's cookie cutter.
No.
I wish it was that easy.
Right,
we don't live in a utopia.
Yeah.
You know, but now it takes us down to long-term care, and this term has been going around a lot, and I don't think a lot of people really understand what long-term care is and how it works. And that's why I'd love for you to explain this product and really what it means for.
This could be a very long conversation, so we'll try and make this part a little bit brief. But so the whole world of long-term care planning is affecting more and more individuals. So just some statistics on that. Anybody who's age 65 and older is going to have a 70% chance that they're going to need some form of long-term care in their life. That's a staggering number, but that doesn't move anybody, believe me, as an expert in this field. That doesn't move anybody to take action. Most people react to long-term care planning when it's already
too late
in front of them, whether it be directly or indirectly, right? It's a reaction to an environment they're now in. Rarely, it's changing, but rarely do we see, by and large, people doing pre-planning for long-term care. And we're a massive, I would say, advocate in planning for long-term care and making very significant inroads. That's the fastest area of growth in our business, has been for really 3-4 years, in working with advisors and helping them be equipped to working with their clients in pre-planning for long-term care. But so what is long-term care? Most people think that long-term care is being in a nursing home. Less than 5% of people ever receiving long-term care spend any time in a nursing home. That's not what this is in this country. It's still maintaining dignity. Most care is received in the comfort of people's home. 80+% of care is received in a person's home. So that's what long-term care really is in this country. You know, long-term care planning is about understanding the consequences, most of the time unforeseen and unintended consequences that it has on the people I care about most, which is my wife, my husband, my kids, my grandkids. Those are the ones that are so impacted by a person needing care, you know. And so we've got to mitigate that.
So let me stop you right there before we go more in depth in this. So to put a little scope, long-term care, of course, you're 65, 66, or in your 60s, and something happens. You know, you fall, you hurt yourself, you're just in retirement age, you're trying to, and it comes to a point where you need assistance.
Yes.
Where you need to have assistance. You know, people say assisted living home or not. You're like, and a lot of people, they don't want to go to assisted. They just, my grandparent, no one.
They want to stay home.
They want to stay home because that's the comfort. As I said,
absolutely.
as we get older, we get more stubborn and we don't want any more help. We want to be in a comfort own home.
Yep.
But it comes to the cost of that. And that's one thing I think that the simple part is who's going to pay, if you retire. And you retire with a good, you can retire, but then you get injured or you have a point where you need that care. Who's going to pay for that assisted person to come and be your assistant at home every day, who's going to take you, who's going to drive you around, because your grandkids or your son or daughter, they're working every day.
Right.
They can't come and assist you. They have to, their livelihood, they have to pay for that.
Correct.
And the cost of it is exponential. If you're just living middle class, it's tough to meet the cost of full-time care at home.
Of course.
They're thousands. I mean, I've looked into it myself because I had family members. It's about $5,000 to $10,000 a month for assisted living, someone to come into your home
Correct.
and take care of somebody, depending on what the condition they're in.
Correct. Depending on the level of care they need.
Yes.
And the type of facility they can afford, right? And you're exactly right. It is $5,000 to $10,000, $12,000 a month for the higher end memory care units and things of this nature. So the process that we play is not just being a product provider, it's also an educator, right?
Correct.
Educating advisors in how annuities can be utilized as part of an asset in a portfolio, educating them on all the different resources and ways that life insurance can be used and how long-term care insurances can be implemented. But it's also kind of identifying the logical scenarios that happen that advisors and clients just don't necessarily think through. And you said it very, very well, just from a consumer's perspective of being indirectly involved in it and recognizing, wow, this is going to come at a really big expense. That's going to have a major impact on whatever resources financially are available. And there's also this impact on, wait a minute, I'm working, I'm in my 40s or 50s when mom or dad need care, and I've got my kids who might be going off to college, and I've got my own world happening. Correct. Now I've got to put that all on hold because we didn't plan for this from happening. And absolutely I'm going to do that because it's mom or dad, right? But we could have done a better job at this if we had planned beforehand. Because the cost of care in home, so if I'm going to pay for somebody, right, to come in and step in while I'm at work, 5-6 hours a day. Well, the basic hourly rate for that care is $25 to $30 an hour. Times, is it 5 days a week and I'm not going to take the weekends off? Or when I take weekends off, so do the math. That's 25 to 40 hours a week times, 25, that's basically $800 to $1,000 a week, times 4 weeks in a month. There's $4,000 a month for just having part-time home care. That's not all the other services, treatments, therapies that people may have. So, and then the alternative is, well, no, that's what my son and daughter are for. They're going to take care of me. And what happens then is that those individuals that are in that situation end up running a deteriorated health as well. Why? Because they're trying to manage all their needs in their own life, but then also taking the burden of mom and dad, and they find themselves in a not very good position.
They're maxed out stress level, they're maxed out of capacity, bandwidth, and it causes,
you can only take so much.
Yeah, you can only take so much. Yeah.
Not to mention, I want me time. Everybody needs me time, right?
Yep.
You and I, we do that through fitness, and we break ourselves silly doing that. But that's how we that's how we find balance in life, So, it's just more and more advisors and individuals need to be aware that this is a need that is never going to go away. And if I can plan for it, without question, my livelihood, my retirement years, the years that are meant to be, pick the adjectives, you know what I mean?
Yeah.
Where,
should be sunshine. It should be sunshine and butterflies in those years.
As long as I maintain health, right?
Yeah,
I want to maintain my health
Yeah.
as long as I can.
Correct.
I want to travel. I want to spoil the grandkids,
Correct.
and all that stuff, right? And that's what it should be.
So now getting down to the long-term care, it's like, how, as a consumer of the product, is it looking at myself personally, my parents, or grandparents are a little too long for that. But when should you start planning for long-term care?
That's a
At
good
what
question.
age?
Probably 50s,
Okay.
For the normal person who's, doesn't have health impairments or health issues or, at early onset, in their 50s. In their 50s, 60s. But, solutions exist for people in their 80s, up to 80, 82, 83. So you don't need to be super young to, you obviously have to qualify, right? The insurance companies just don't give everybody this wonderful benefit without a qualifying for it. So that's there's a process, right? So engage your financial advisor and say, we really need to talk about long-term care planning, and I really want to have a specific conversation and a plan in place for what happens if me or my wife need care. That's my advice to the consumer who's saying, you're right, there's something here. We should take the next step. Engage your advisor and say, we need to talk further about this.
Yeah, I mean that brings me back to understanding like the age of reinvestment and what it goes into, understanding the product itself, how it works, the cost impact, because of course there's a cost with everything, but it comes down to you're investing on yourself.
Yeah.
You're investing on yourself. It's not something that you're investing for something else that goes to waste. You're investing in yourself for your care as you age. And right now, as you probably know much better than I do, the boomer age and retirement age is massive right now.
Massive.
So, I mean, how in the next 5 to 10 years, do you have a stat of how many people are retiring or going into the retirement age?
So it's the next 20 years.
Okay.
The boomers are retiring at the rate of, I think it's 10,000 a day or something.
Wow.
Yeah.
Wow.
We'll need to check.
Okay.
Fact check.
We'll Google that.
Yeah.
We can Google that.
What's funny is we've been throwing that term around since pretty much I've been in the business. So at this point, we'd probably have another 20 years at the rate of 10,000 boomers a day. It's the largest segment of the population.
That's correct. Oh yeah, you've been confirmed. The Google has confirmed.
It's one of those things where you give a statistic so many times, it starts to.
Yeah, but it's fast. It's extremely fascinating how that is. And so the next 20 years, and of course these days, retirement age is 65, as we knew when I was. It's not the same. People work much longer these days. It's not the traditional from 50 years ago. People.
Oh no, that's a fascinating.
Yeah.
Fascinating. Really study to look at how the Great Depression generation is different from boomers. Boomers are different from Gen X. But the largest transfer of wealth will be from the boomer generation to us.
To the Gen X.
Yes. That is the largest shift of wealth. Now, the wealthiest generation will be millennials. Absolutely. Fast catching up on that and will overtake every generation that this country
because
has
you can
ever
see
seen.
the amount of money, and I mean you can just it doesn't have, you can just look at the industry and the markets and the things and see how much money is out there. The inflation is what's happening, the cost of things has increased. Valuations are trillions of dollar valuations.
Correct.
Yet these are no one ever thought this would happen. But moving into that is as the age goes. So right now, do you think, what's the majority of people that work past 65 or to 75? Do you think there is an age, or people are just working until the point where they have a health challenge?
No, definitely. And a lot of this is sourced from just what happened in 2000, 2001.
From the crash of the dot-com.
Correction. And then
2008.
2008, exactly. So for those two market scenarios changed everything. From the boomer's parent, who basically, their professional career was they worked for the same company for how long? 30 years, and it was Northrop Grumman or Howard Hughes Aircraft, whatever.
Or automotive, and aerospace, and all the things.
And I got a pension, and what did I do with my paycheck? I worked to pay off my house, so that when I retired, I didn't have a mortgage anymore. And I collected this pension and Social Security, and retirement was pretty good, But then came the deterioration of pension plans because of the cost associated with that for businesses. It's not sustainable. And introduced the 401k, which is certainly, vulnerable from what the market dictates. It's not protected in this little bubble, and that's the generation that boomers. So they're more spenders, right, than their parent, who was a product of the Great Depression. So there's a whole behavioral mindset there.
We have a shift in mindset, a shift of. Yeah.
So boomers maybe have worked, 2, 3, 4 different jobs over their working career. They definitely are more spenders from a habit standpoint. They travel more. They're getting more in tune with electronics. It's interesting. Gen Xers, you think about when we were kids.
We didn't have anything. I think when we were kids, the beeper came out. We had the beeper.
The beeper. Yeah.
The beeper.
Hello.
Yeah, that was
4311.
Yeah. It was all the digits and codes, and that's what we grew up on until cell phones, till teenage years in the 90s. The cell phones start coming around, but that's what it was. I mean, there was not even a fax machine when we were born. There was no fax.
So you think about our childhood and our upbringing. We were kind of caught in the middle of pre-tech and now exposing ourselves to tech, as opposed to millennials. It's their whole livelihood, and even exacerbated right now due to COVID, just add steroids to any virtual digital interaction. And so it's forced the world, right, to become more in tune with technology, even if I was a pecker on a keyboard, So in the last 6 months, everything's dramatically changed, and what's the new normal going forward?
Yeah.
It's a very, very interesting.
Well, the acceleration in 6 months, I think we accelerated 2 years, which means that how fast we move forward.
And it feels like 5.
Yeah, it does. I mean, it's depending upon the technology that was there, and the bandwidth and the change of habits, right? What are our habit change? Our way we communicate, the way we habit, the way we interact as professionals, as a salesperson. We're all salesmen, traveling salesmen.
Yeah.
We can't physically visit our customers anymore. We can't have that face to face. So we have to do the Zoom. We're Zoom Live, the Zoom Live, WebEx, whatever you want to do, Teams. Everybody's doing that, and that change is a different. I mean, as I said, these are the people put it in perspective. That just change pushing me with technology is one thing.
Yeah.
But then, when it comes down to talking about insurance, it's like, what's pushing them to get insurance? And when it's not too late, what's going to take them? Because that's a big thing. It's like this insurance is going to save their. I mean,
so the analogy I always give with insurance. So life insurance is probably and long-term care too. Yeah. But life insurance would be the most morbid product.
Yeah.
Why would I? To reap any benefit from it, I have to die. Fair enough, But so it is with life insurance, or with long-term care insurance. Excuse me. I have to be medically impaired. Well, I don't want to think about that. But I think it comes down to just lack of knowledge and understanding. Because when we work with individuals and talk to them about just the logical consequences. So you had mentioned, I'm seeing that, when someone needs care and they're going to go into a facility, it's somewhere between $5,000 and $10,000 a month. What doesn't change is, if I'm married, I usually have what we call an in-community spouse, a spouse who's still healthy, active. The finances of that household, they don't dramatically reduce all of a sudden. They dramatically increase to pay for the care. So I still have a home. I'm paying a mortgage if I have that. I still have cars. I still have my country club membership. We still have our second home. We're still buying growth. We're still doing all this stuff. So, it's just not having any real concept of understanding the impact that it's going to have financially, as well as the impact that it's going to have inconsequentially to the people that I care about the most, which is my family members. And with boomers in particular, which is the driving population that we're talking to, right? It's just a matter of accessing them, connecting with them, having the communication with them, and taking them through this educational process so that they can make an informed decision on their own. And long-term care planning does not mean that everybody has to buy insurance. It means you have to have a meaningful conversation with your financial planner to talk about if we need care and our monthly expenditure goes from $10,000 to $15,000 a month. Where's the money going to come from? Do we have enough liquidity in our portfolio to weather that storm?
Yeah.
You know, and all assets aren't created equal from a tax standpoint, right? So if I have an IRA, every dollar I take from an IRA is taxed fully as ordinary income forever. That's the way it works, unless it's a Roth. But if I have, stocks in a non-qualified account, as an example, and I bought Apple, I don't know, pick a period of time, 10, 15 years ago. Well, how appreciated is that Apple stock, right? So it's just understanding if we start to make changes and liquidate assets, I've also may potentially have serious tax implications that we have to deal with, as opposed to leaning on an insurance company that can leverage dollars up to 3 to 5 or lifetime benefits, all tax-free.
All tax-free. So that takes me back. That's a quite good question I have for you, Scott, is how, example, you have, say you have $250,000, $500,000 of liquid cash, or 100,000, but just a substantial amount that either you can invest in a property but you want to put this into a product that can give you a return, right? What type of product is that? Is that an annuity? What type of product can give you a return where you can invest and it gives you a monthly return or an annual return that you can actually take from with paying less taxes, for example?
Yeah, so annuities are going to have that opportunity to where you can earn a conservative interest rate, and there are specific advantages to that of an annuity. But understand, annuities, with the exception of a variable annuity, are safe interest solutions. I'll call them that. So you're earning a modest rate of return relative to other options that I can have that aren't going to be quote unquote, at risk. They're on the end of the spectrum of safe choices versus at risk and fully risk choices, right? Like individual stocks would be way out here. Savings accounts, money market accounts would be way over here. Annuities would start to teeter a little bit towards this direction, but still on this side of conservative, right? So there's what an annuity can deliver in terms of return, and it has advantages like tax deferral if it's non-qualified money. So the interest that's earned within an annuity, I don't pay taxes on it until I take a withdrawal. If it's an IRA, it doesn't matter what it is. An IRA is always taxed as income, with the exception of a Roth. So those are kind of the benefits of an annuity. But with long-term care insurance, so let me give you an example. A 60-year-old female or male, rates will be different based on sex. Women live longer than us and are more healthy than us, generally speaking, from an actuarial perspective. But a 60-year-old male or female can get anywhere from 3 to 5 times the dollar they put in for long-term care benefits. So if I put in $100,000 into a long-term care plan, let's just say, I can have anywhere from $300,000 to $500,000 worth of tax-free long-term care benefit to use. Well, that's substantial. Yeah. Now, I don't have 100% access to that money instantly. The insurance company has a monthly limit that I can take over a period of time.
That's how it works. Opens it up.
Exactly. Yeah. The analogy is like a bucket with a faucet attached to it, and I can take X amount per month for over a period of time. But what risk and what rate of return do I have to earn to take $100,000 and turn it into $300,000 or $400,000 or $500,000 after taxes?
Correct.
So it's substantial leverage. And as I age, those benefits, the curve starts to decrease, which is logical because I'm older, I'm less healthy, I'm closer to needing care than if I'm 60, let's just say, right? So it all just kind of works out that way. The carriers are very, very good at pricing these products.
No, I mean, that's how I wanted to give that perspective of how it works. So for that type of money, or you want to do so, if for long-term care, it's not I just want to understand, how does the product vehicle work? You pay monthly, or you put a large sum into it?
Any imaginable way
Okay.
to think of how you can obtain long-term care leverage, i.e. insurance, can be done. So lump sum, one deposit and done, monthly, $200, $300, $400 a month for an undefined period of time. I can reposition certain assets that I might have. Maybe I already have an annuity that's just kind of dusty money sitting aside. Well, we can 1035 exchange that, which is a tax-free transfer into the right solution for long-term care. Old life insurance policies, distributions from IRAs. So it can be done in any imaginable way. You just need to know how to do it.
Okay.
Right.
And that your financial advisor would have that.
Lean on us.
Lean on you.
That's right.
To give them the foresight and the knowledge and the direction of what type of vehicle to use and what type of product to use.
That's right.
So right now, what for someone that's, as I say, for investment strategy, let's do it two ways. Let's do it from a 40-year-old investment strat, 35, 40s to 50s to 60s. How does someone, who doesn't know anything about investing, or they have some money, they've built their wealth, but don't know where to invest it, what to put it into, what type of product, how do they have a simple strategy to implement? Questions should they ask? Like, there are 3 questions, simple questions that ask themselves, or things they should think about, and what products should they look at?
So the first is definitely to do what you did, right? Which is do some estate and trust planning.
Okay.
Get a trust. Because that gives you a really good perspective of your particular scenario, the assets you have, the type of business that you are in. Not all businesses from a risk standpoint are created equal. Take, for example, a dentist. If a dentist or a doctor does something wrong to a patient, right, there's significant liability. You and I don't have that risk or liability. So there's all these kind of ancillary identifiers that would dictate somebody's level of liability in their profession, what their particular situation is, how many kids they have, their lifestyle, their risk tolerance, and all of that can be kind of discussed and vetted through proper trust planning in context with an estate planner as well as the financial planner.
Right.
But there's a number of resources that exist today and articles and content for an individual kind of go down the do-it-yourself path, if you will, to get things started and start to develop their own financial plan with wonderful tools through just those do-it-yourself platforms, right? Yeah. Or they can engage with a financial planner, someone that they know. Don't be afraid to ask around is what I tell people. And we all too often, we just kind of keep finances and all of that very private. Not that you disclose your finances, but you can certainly ask a friend like, hey, do you have a financial advisor or somebody that you know and trust that I can maybe reach out to, So just ask questions, engage with people. If you really want to go down the path of, I want professional advice and I want to work with a planner, find one, do research. There's plenty of resources that exist today that help an individual, or the best place is to ask around, word of mouth.
Well, yeah, I mean, of course, that's one thing, is to have like I said, there's no stupid question. Ask people, because your network, there's so much information within the network of people around you. They can give you, to direct you to the right place, but some people, of course, finances are kind of IP. People don't like to discuss them. They're like the intellectual property. They don't like to discuss them with people. They think it's disclosed, or they don't want people to know, or they're embarrassed. Either or, there's always a sensitivity to that. So and that's one thing of creating this podcast with you, is to really give some people more foresight and understanding really what's going on in the market, the investment strategies for long-term care, life insurance, annuities. Just to give some more information. At the end of the day, it's just informing everybody, building awareness and understanding it. But one thing I want to get to is we're currently in a pandemic. There's no post-pandemic. I mean, we're currently still in the pandemic. We're dealing with it every day. Changes happen. People are dying. How has the pandemic changed your industry?
Yeah. So in many ways, I'd say we've navigated that pretty well. So our world is indirectly tied to just the financial markets altogether, right? And predominantly it would be the really interest rates and volatility of the market. So there's kind of how our products that we represent are priced from a financial perspective. So the 10-year Treasury this morning was 67 basis points. Beginning of 19, we were looking at a 10-year Treasury of 280, 285.
Beginning of 19 or 20?
19.
Oh, 19.
Yeah,
okay.
so if I go back,
almost 2 years, year and a half, yeah.
Maybe you could pull that up, the 10-year Treasury, exact number.
10-year Treasury at 2019.
And even that's very, very low, right? So, we are sitting at very, very, very low interest rates, which has significant pressure on financial markets as a whole and insurance markets. Certainly, that has been a major challenge for our partners, our distribution force, which is the insurance companies. But through the pandemics, you think about it, so many clients and financial advisors engage with their clients how before all this? Face-to-face.
Face-to-face.
That's the way we did business predominantly. Those individuals who hadn't started to interject and incorporate technology like these kinds of solutions, be it Zoom or just using email and online application sources like DocuSign and what have you, have been, challenged. They had to quickly adapt, and they were already behind the 8 ball. So from a pandemic standpoint, it's figuring out how I can effectively market to new prospects, get myself introduced to new people, right? Because that's how I scale my business.
Networking. How do you build a bigger network in a pandemic?
And so that's a challenge, It
was, 2.14 in 2019. There it is.
So it then ticked up, but now we're down below 70 basis points, right?
As
so
of today,
very, very
let's
low.
bring up today. So can you put up today's so we can just have, as I said, we're talking about technology. Look at this.
Insurance companies are driven by, predominantly the 10-year Treasury.
10-year today.
69 bips.
Is that 69? Yeah, it's 69.
Yeah,
right?
69 bips. Yeah. So that's been a challenge, and will be a challenge for quite some time. Yeah. But with that said, the tide, it's a tidal thing, meaning if interest rates are low, there's no unique outlier of a place that's getting a better interest rate without risk.
Correct.
Right? So if I'm getting a better yield, it's because the markets are saying there's more risk associated to that investment
that
or
product
whatever it is. So that's been a big impact for us. And then also just the whole sales and marketing aspect of it, pivoting to engagement from a direct person to person, knee to knee, kitchen table kind of interaction,
physical,
to having to go virtual has been a big challenge for many advisors. So thankfully, we've been very, very effective in implementing resources as a company and helping advisors pivot by interacting with them on a digital basis and giving them resources and tools and really deploying a team of people that are there to help advisors be more effective in the digital world. Yeah. And that's proven in short order to be we've been very effective in that, I should say.
What do you think what is you think is here to stay? And what do you think post-pandemic, this is going to be more? Because it does, one thing it is, as you know, in my industry, I think, I've flown to Singapore for a 2-hour meeting and flown back before. And did I have to do it in person? Some of those are relationship building, which I've never met the person. Yes. But a lot of those I didn't have to do, So these are things, not even just doing domestically, flying, because it takes you a day to get there. Fly to East Coast for a meeting, then fly back. These are types of things.
But it's a good question.
Yeah.
So, like, you think about this. Why did you obviously saw value in yourself traveling across the world to conduct that or be a part of that 2-hour meeting. And then you think about, okay, what was the effective result of that meeting? Could the outcome then have been the same if I wasn't there?
I think there's two ways to look at it. Two things. There's relationship building that it's priceless, in my opinion. You have to be in person. You have to meet the introductions, right? To meet the person that physically, you go presenting themselves. And it also brings a lot of things of hospitality and the person respect that you actually went somewhere and met someone for the first time and took it out of your time or your busy time to come meet them, which it builds respect for the other party too. Yeah. But it goes to someone saying that you've known the person, you've been doing business with them for many years, or you've done a lot of transactions personally. Right. And now we're stuck in this type of situation. Like, really, you know what? We can do it over a Zoom. We could do a conference call with 3 of us. Let's just knock it out over a digital call. You guys don't have to worry travel here. Don't worry about it. We got it. We can handle it. And we've really acclimated to the situation. And we're all in this, that the costs actually come down and we all save time because we can be all more efficient. Right. Because there's less travel involved with those times going. So there are.
You're saying that you establish the rapport using the example of flying literally across the world.
Across the world, yeah.
What made that successful going forward was what you described, but making the commitment and the effort and also, establishing that rapport where they got to know you. And then from that, there was rapport and trust established that you could then build upon afterwards.
Correct.
It didn't need to be face-to-face.
That first meeting needed to be face-to-face, but after that, we
so
didn't
that's
have
the
to,
question, right? In this, what's the new norm?
Yeah.
And how do we effectively replace you and I getting together in person?
Correct.
I don't think humanly,
you can't replace this. No,
there is no replacement of that. Does that mean that I can? There's pros and cons to both, right? And our buddy Joe Rogan does a really good kind of prioritization of just communication, and face to face can't be trumped. No pun intended. Yeah. Then it goes to virtual. Yeah. And then it goes to phone call.
Telephone, yeah.
Then it goes to
email
and texting.
Texting
is the worst,
yes.
Right? It's a very interesting conversation of that we can certainly be more effective, productive. In other words, I can do more in a day if it's all on the phone or virtual Zoom conference or whatever tool I'm using from a video conference standpoint. But I've never been able to be as successful developing relationships with really good advisors if it wasn't in person.
Yeah. So picking up on that in person, as you say, is like you've your experiences having a face-to-face with an event helps you build with an experience, not an event, with an experience helps you build a better relationship with your agents or clients that you are trying to prospect.
I think yes, but let's think about like in the 30 years we've been friends, some of the most memorable moments and experiences I would say in my life have been stuff we've done together, as an example. Whether it be, camping, outdoors, concerts, whatever these are. So how do I, one of the things I've figured out and continuing to kind of work on or develop is what an idea to have relationships with people that you really, respect and enjoy and share similarities to, and we can do business together.
Correct.
And then through that, why don't I create experiences like, musical events or
golf or a sporting event or whatever it can be, like something like this together.
But things that are really outside the box,
correct.
that people don't have access or choose to do every day, whether it be, shooting a gun and learning how to properly shoot a gun, or drive a car really fast, do these types of things that most people would particularly love doing, but through that experience, we can create a bond. Yeah. And from that bond, we then have this kind of mutual interest because we enjoy each other, right? And we can do business together,
I 100% agree. It's funny is in our in my industry, in your industry, because it is B2B. Mine's B2B as well, but there are some challenges because there are some of the companies do have compliances in place. It's ideal with the manufacturing, the buyers, commodity leaders, because they can get, of course, a lot of the things of the wine and dine and schmoozing, and that comes into play. But the experience is, it's challenging for me. As much as I've tried to put events on, I've even had our, this year would be our 15-year, for example, one of our offices in Asia, and we would have a big party. We're not going to have it this year, but we had our 10-year. For example, our biggest customers couldn't come because they had guidance to put into their things that the staff and people can't attend because it's like giving favoritism. No. It's giving favoritism of companies that give them an experience that can give them favoritism of business, right?
Right.
So it's kind of a things that these are, I think every business is different. I think, of course, your business has a complete different model with that's, because I think the agents are their own business unit as well. You are your own business unit as well. But when you talk about corporation standpoints, even high executives, they still do it and want to take their potential clients or partners out. But there's challenges on that.
So over the years, what would you say some of the best events or experiences that you've done?
For our clients or for our company?
Both, either one.
Our last, the ones right off the top of my head is 2019, and I took 50 plus of our staff to Philippines and had an outing from all over the world. I invited all 100, but only 52 come because of some circumstances. But that was probably the best experience of my career. Wow. My father got to come to that, and it was good for him to finally see something that you can bring people around the world that have been talking to each other for 20 plus years and never met each other. And got to actually physically do an event. We did an amazing race together. We had parties. We danced. We drank. These are the types of things that it kind of build that bond of more, which was great. And I've did many of them will never forget. Yeah, and as I said, that I had a 10-year at Philippines, which was good. I've had a lot of these type of events with different companies and outings, and to me, the biggest ones that felt to me the most is my giving back. I mean, I've had a part of other companies putting things on, but I think for me, is the biggest ones of giving back to our company and our people and doing things together, getting us out of our and really creating memories, pictures, videos of things that we can remember for years on end, than just doing it with our clients. Because we're in two different industries, so I think the business model is different. So I can't really compare that, but that's the types of things that I would love to do. I like to do that every year, to meet everybody. And for myself,
bring everybody together. For
my changes, I can't travel. As you know, I traveled a lot. I traveled all over the world. I travel 3-4 times a year. I'm traveling to Asia.
And personally.
And
you and I both travel a lot.
Yeah, I traveled. Yeah, you did too, domestically heavily for a long time. And I've been to 20 years internationally heavily. But now I can't do that. And I've missed my team. Yes. Did it give me energy? Yes. Is that something that I love to do? Because I got, as you said, there is something you got to meet with all the high executives, decision makers in person. I got to talk to them. They give me their knowledge. I learn from them as well as we all shared information. We built a bond and relationships. Right now, it's difficult to do that. So one of our top customers, I used to see him in person. I can't just call him right now. It's hard for me to call him. He's like, okay, we have to set a date. I have so many other calls and internal calls, and it's now just getting the schedule to get to have a Zoom call together. Yeah. And that's the challenge. Before I flew there, I can get to have that meeting, which was and right now, I as myself, I have a lot of energy. So what are we doing? We're building awareness. I'm trying to connect with people and build awareness to the industry of not just my industry, of your industry, of insurance, lifestyle, things that can really change the world of who I am, and also is bringing awareness of educating everybody out there, because you're like a book to me. I learned from you today, I don't know, 45 minutes to 1 hour of information you give me that I am enlightened, I can take from myself, and I can also pass and give people more advice of at least direction where to go, because I didn't know that. So every person that comes on,
it's nothing else, it's a little awareness.
It's awareness, right? So every person that I bring on this show, the Real Talk, I learn from, and also we go back and forth like we're doing, that really brings some insight and awareness. And it's my personality as well. I love to meet people. I loved it. It's just who I am, you know. I love that. I love to bring people together, have a good time, talk about it. But right now, it's also as well as I can learn as well, and I think everybody loves to talk and has a story. Everybody has a story. You have your story. We all have our story. And every company, every person, every entrepreneur has a story.
It's a great thing that you're doing. That's for sure.
Yeah. So this is really where I see really moving forward. The podcasts that we see them have accelerated the awareness. A lot of people don't read as much as they used to, so they like to listen. Audiobooks I'm an audiobook fan. I listen to audiobooks all the time.
Yep.
So, so it's fantastic.
You just gave me a recommendation of one, actually.
Yeah. I
got it queued up.
Yeah. So, and even working out or just taking the dog for a walk or, just listen, or driving, so as we both do drive, you drive, I know you drive back and forth. And so, but anyways, that's really where we are. But let's wrapping this up. What is I would say for your industry, what's your outlook for the future? What are you predicting happening for your company or for the industry in simple insurance, annuity, long-term care? What do you really see with post-pandemic things changing?
Yeah, so obviously the more and more integration in our industry from technology. Our industry is rapidly developing into integrating digital signatures and that digital technology throughout the application process, the training process, and all that. So obviously you've got this significant introduction and acceleration of technology and the digital environment. In terms of the desire, the demand of our products, they're only going to continue to evolve and I think gain more interest and awareness because of what we talked about, just the aging population of boomers that are happening at a rapid pace for the next 2 decades. And so through that, and more financial advisors themselves are being less transactional from just selling and transactionally dealing with stocks and bonds as a generic statement, to recognizing financial planning. If I'm going to represent myself as a comprehensive financial planner, that means that I need to include other facets of the financial plan, which include insurance planning. It includes tax planning. It includes estate planning, right? Not just investment strategy.
It's like a full 360.
It is.
Like a 360
exactly
solution, right? It's a 360 solution.
Absolutely right. So as that continues to evolve and develop, the demand and the need for our products will only continue to grow and scale, So it's our commitment in our little world that we just want to partner with high-level financial planners and wealth managers that really share in our approach and in our interests, and we're like-minded, and just continue to kind of scale that, and have a great practice and do good in the lives of not only the advisors, but more importantly, the lives of their clients.
The clients and the people.
Absolutely.
Because we're all working for somebody, and as you say, that gives you the affirmation of changing lives, changing people's lives, giving the opportunity, through a financial planning, through something that will make a difference in their life.
Absolutely.
And that's, I highly respect that. My business isn't so much what I can change. Yeah, we sell to technology, life support, defense. We do our changing lives, and that is so everybody is changing lives and giving opportunity. Yes, we do need day out. Right? We need the devices out there. So, but that's it was really insightful, Scott, because I agree. It's that I think as the technology grows, as we evolve, being single task or single skilled in one. It's not, you have to have more of a 180 or 360 skill set.
Exactly.
That skill set of being single, just focused on kind of, as I say, as kind of narrow-minded a little bit. You're not, you're side the box.
Yes. Yeah. Laser focused.
Yeah, on focus,
which is the good part. But also recognizing that there's vulnerabilities.
Correct.
By not incorporating these other facets of individuals' needs, you know.
Because my company, we're a solution company. We just don't sell a product because anybody can go online and buy the component now. It's all digital. It's all online. But we actually, the value we bring is the solution, the interpersonal, the solution globally. We can get, we can bring different logistics, finance, design. We can do all that. It's not just selling the product, because the product, it sells itself. You just buy it anywhere. But it's having the solution around the product and connecting with the right customer that you can fit, and that's where you build that. Or it's like the same thing in your series.
It's identical. Yeah. Identical in the sense that your product can be accessed from how many other, let's call them vendors.
Vendors, yeah.
Many. I don't know the number.
Yeah, thousands. Just say thousands.
Same with us. Yeah. Our products, from a financial planner's perspective, can be accessed through any number of vendors. That doesn't make us unique in any form or capacity. Yeah. It's the relationships we develop, the partnerships that we can establish, and the value that we can bring to an advisor's practice.
Correct.
That's outside of the product, you know?
Yeah, I mean, I agree with you on that. So, as I say, everything these days is solution-based, and I think the industry and the world is going to more solutions than just answering one problem. You have
transactions. It's solution-based.
Solution-based,
absolutely,
and that's what we're going with. But do you have any last words, my friend?
Live life.
Yeah, man, fullest, it's been fantastic. Look at us, man. We're here, and you know what? This is something, and I can't wait for your.
Been a good ride.
Yeah, I can't wait for your to build your little studio. It's been a good ride.
Optimized advisor.
Optimized advisor.
That's right.
You're gonna nail it. I think in your industry you're gonna do very well with it.
Yeah, it'll be fun.
It'll be fun. I think you're gonna have a good time with it. You get a little comfortable, and it becomes it's just clockwork. Just like being on stage speaking in front of people, it's like clockwork. Time. So, well, thank you very much, sir. Thank you for being my guest in the Real Talk today.
It was great.
You've enlightened me. I've learned a lot more. Even though our short conversations we have that, but this is, and I hope we built some awareness. People listening, that they can get some insight and understanding of long-term care, insurance, annuities, to give them some time. Because as I said, it's a lot of, doesn't matter what we're in. Sometimes we just don't know. We don't ask. Just to say, everybody, ask.
Don't be afraid to ask.
Don't be afraid to ask. And that's what we leave you with that. Don't be afraid to ask a question. Engage. And as I always say, be thoughtful, be smart, be generous. Thank you all. We'll see you on the next show.